Okay, you guys, we're now going to start problem 2-4A, and that's on pages 92 and 93 in your textbook. In this problem, we're going to cover these first three steps in the accounting cycle. Transactions are analyzed and recorded in the journal. The journal is the first place that the information hits the accounting records. Then those transactions are posted to the ledger. Now in the ledger we have a separate space for each account that the business uses, and when we transfer those journal entries over, it will update the balances of the accounts in the ledger. That process would go on throughout the period until we're ready to prepare financial statements. Some companies would prepare those as often as monthly, some quarterly, and then some at least once per year. These steps 3 through 10 would be completed when we're ready to prepare financial statements. So we'll start with the journal, and you can work this problem along with me on the PR 2-4A Excel template that I've posted there on the page for you. It looks like this. Let's first take a look at the problem. On bottom of page 92, the name of our business is Elite Realty, and their service business. And they give us an unadjusted trial balance dated March 31, 2016. You guys, that's just a listing of the accounts the business uses and the balances in those accounts on that date, March 31, 2016. And if you'll notice, accounts have a balance on the side that they increase on. So let's go back. You've looked at this already. The rules of debit and credit. Our assets increase on the debit side. We'll notice all of our asset accounts, cash, accounts receivable, prepaid insurance, office supplies, they all have debit balances. Land is also an asset. It just happens to have a zero balance at the moment. Your liabilities increase on the credit side. And notice all of our liabilities, accounts payable, is the only one so far with a balance, has a credit balance. Liabilities would have a credit balance because they increase on the credit side. Unearned rent and notes payable are our other two liabilities. They just have zero balances at the end of March. That won't be true by the time we get to the end of April. Common stock and retained earnings both increase on the credit side and both have credit balances. Dividends increases on the debit side. Notice it has a debit balance. Then fees earned. It's a revenue account. Revenues increase on the credit side. Fees earned has a credit balance of $240,000. And then our expenses increase on the debit side, and if you'll notice, they all have debit balances, salary and commission expense down through miscellaneous expense. Okay, if you'll notice on top of page 93, they list all of the transactions that the business encountered in the month of April. Okay, what's going to happen? We're going to record those transactions in this journal. All the transactions for the month of April. Then those journal entries will be transferred to the separate spaces. Here's our ledger. Space for cash. Space for accounts receivable, for prepaid insurance. We have a space for each account. Once we've made our journal entries, we'll transfer or post those journal entries to the various ledger accounts that the entries affect. And that will update the balance of those accounts. So eventually, once all these transactions for April have been journalized, and then the journal entries have been posted to the ledger, we'll have a new balance for each account on April 30th, 2016, and we'll prepare another unadjusted trial balance, just like the one you see on bottom of 92, except the date will then be April 30th, 2016, and the balances will all have changed, or most of them will have by then. So let's follow our instructions on page 93. Number 1 says record the April 1st, 2016 balance of each account in the appropriate balance column of a 4-column account write balance in the item section, and place a check mark in the posting reference column. What they're wanting you to do, you guys, is set up the ledger accounts for this business. Now, if you were doing the manual set of books for a real business, the ledger accounts would already have been set up because they all have balances. You notice that they do there on bottom of page 92. But since we're doing this problem in the classroom, we need to set up those ledger accounts. And I've done that part of the problem for you. We'd write in, we'll just go down the list on that unadjusted trial balance. We'd first write in cash. Its account number is 11. These are April 1st balances, or they're balances as of the end of March, which become balances as of the beginning of April. Then we type balance in the item column. That indicates that this number is a beginning balance and not a number that we brought over from the journal. We'll place a check mark in the posting reference column. That also indicates that this number is a beginning balance and not one that came over as a journal entry. And then the beginning balance for cash was a debit of $26,300, and I have that here in the debit column. Let's check all of them to make sure they're correct. We'll do a separate space for each account. The next one would be accounts receivable. Okay, it's April 1st, balance, check mark, 61,500 in the debit balance column. These first two columns are for numbers or amounts that we'll bring over from the journal. So that one's good. Prepaid insurance, a beginning debit balance on April 1st of $3,000. Office supplies, an April 1st balance of $1,800. Land should be 0. And it is. We haven't put in anything yet for land other than the account name and the account number. Accounts payable is a beginning credit balance for $14,000. It's in the balance column, but it's in the credit balance column rather than the debit balance column. Unearned rent and notes payable both have 0 balances. So for now they're blank in the body of the ledger account. Common stock has a beginning credit balance for $10,000. Retained earnings has a beginning credit balance for $36,000. Dividends has a beginning debit balance for $2,000. Fees earned has an April 1st credit balance for $240,000. Salary and commission expense is $148,200. Rent expense is a beginning debit balance for $30,000. Advertising expense $17,800. Automobile expense $5,500, and miscellaneous expense $3,900. Even though I had already set those up, you guys, it's a good thing to go through and check them. Could prevent us from having problems later on in working this particular problem, or having issues in working this problem. Okay, so that's that first instruction, to set up the ledger accounts with the April 1st beginning balance. You guys, I've completed that part for you on this problem, and I will have completed that part for you on the test as well. Your first instruction to complete is actually number 2. Journalize the transactions for April in a 2-column journal, beginning on page 18. Well, all of ours are going to be on the same page. I think in the middle of the problem, if you notice after the transaction on the 23rd, it says enter the following transactions on page 19 of a 2-column journal. All of ours are going to be on the same page, so you can disregard that. So the first step we'll complete will be to make the journal entries for these transactions. And we'll start that in the next video. Thanks.